We had 7 people on the Economic Outlook session this year. It was led off by Christine Lagarde, Managing Director of the IMF, who told us that we had recovery. There were some significant risks, financial risks, particularly deflation risks, and that the priority now is a reset of monetary policy and actually of reforms. This was followed by a really quite fascinating discussion of the Eurozone with Mario Draghi, President of the European Central Bank, and Wolfgang Schäuble, the Finance Minister of Germany. There's some confidence now that the Eurozone is turning the corner. At least it's not now regarded as a crisis zone, which is a big change for recent years. I think that's widely shared. There was quite a bit of focus on the risk of deflation. Madame Lagarde raised that issue, and Mario Draghi basically said 2 things. One, that the ECB would act and had the tools to act. And second, that he actually discussed what that might mean. Conventional quantitative easing, buying lots of bonds. It's sort of ruled out by the treaty, at least that's obviously one interpretation, but they can buy other assets, and he discussed what that might mean. So that was a really quite important point that he made, that it would do what it takes. Mr. Schäuble emphasized the importance of national responsibility, no debt mutualization in the current context. That would only lead to backsliding on structural reform. He emphasized the great success of the program countries, Portugal, Ireland, Greece, extraordinary success of Greece in dealing with this. So that was a great success. Then we moved on to India. Monte Carlo Walia, he discussed, who's a member of the Indian government, India's disappointments, but he's optimistic about the future, and he felt clearly there are some big issues in the emerging world, but China's slowdown was managed and manageable, so he was reasonably comfortable with that. We had a discussion of Japan with the governor of the Bank of Japan, Haruhiko Kuroda, who has introduced this radical new monetary policy, massive expansion of the balance sheet of the Bank of Japan in quantitative and qualitative easing, which is seen as the passport to the return of inflation, and he says he's halfway there. We moved on to UK with Mark Carney, the new governor. Now, there's a widely held view that guidance has failed because we've got so quick to the threshold. He's convinced, and he was very clear, that indicating the sort of policies that were appropriate in the future was very important in this time when we've got recovery, and insisted that it remained important to support the recovery, that there would not be any quick reversal, and that they would be looking at the whole issue of how guidance worked in February and the next inflation report, and tell us about that. And finally, Larry Fink, head of BlackRock, a huge asset manager, the biggest asset manager in the world, talked about the financial risks in the US, also moderately confident about the US, emphasized the risks of volatility, emphasized the problem that we're moving away from the environment dominated by central bank expansion towards an environment in which politics would count for more. And he sort of felt, well, we're going to have a volatile market environment, but he shared the general mood of cautious optimism that all these participants were revealing. And that's the change. It's 7 years after the crisis, or almost 7 years after the financial crisis sort of started emerging on the world. People are beginning to see a longer-term picture again. But let's emphasize, we still have completely abnormal monetary policy, hugely aggressively supportive of growth, and still have very weak growth. So how normal, quote-unquote, policy will become is very, very unclear. Could be very limited. Interest rates are not going to rise quickly. In some cases, maybe in the European case, Eurozone, there'll be more expansion. Who knows? So it's very definitely not normal. And the other big thing that I took away from this is a big discussion about what technology means for productivity and inequality, and therefore the long-term fruits of a return to growth. Who's going to gain from these? I think that's the other big economic question which we're beginning to see emerging to the forefront as the crisis environment fades. Martin Wolf, Financial Times, Davos.